Great. Thank you very much, Kevin. And hello, everyone. This is Raymond Stein of Ninja Trader. I hope everyone's having a great day with this great lineup of presenters, and we're very honored to be included in this great event today. As Kevin said, I've got a great presentation. I'll start off with you for some tools you can use right away with Ninja Trader, followed up by our great partners at FXCM. They've got some more information for you as well. Well, we have just a short time period here, so I'll go ahead and get started. I'll try to get to questions if I can. If I can't get to questions, just email any questions that I missed to sales@ninjatrader.com. I'd be more than happy to answer any and all questions later today. So let's go ahead and we'll get started here. Just a quick overview of what I'm going to cover today. I'll tell you just a little bit about Ninja Trader and Kinetic if you've never heard of us, and then I'll get right into three techniques I want to show you today, or three features. I'm going to go long and short at the same time on the same market in the same account and talk about why you'd want to do that. I'll show you how to bracket a market to play the breakout for the news, or how to play the range if you want to do the opposite, and then I'll give you a quick example of how you can quickly and easily test out any trading ideas you have in Ninja Trader by creating them with our wizard. No programming required, fully automated strategy, very easy to use, and you'll see how quickly and easy it is to get started with a strategy. Now, I hope you can all see my links in chat that I put in there. I just want to put in the download link where you can download Ninja Trader for free and follow along with everything I'm showing you today. I'm doing with the free license key with Ninja Trader. Now, I also do have a Ninja Trader webinar offer for everyone in attendance today, so definitely stick around for that. So let's go ahead, and I'm going to bring up the Ninja Trader platform right now. And so here's our control center where we start, and I'm actually just going to bring up a chart. If you go to File, New Chart, you can have that chart. So let me explain what you're seeing here first of all. This is going to be yesterday's data. Ninja Trader's got a market replay feature that allows you to play back data from just about any day on the futures and Forex markets. So you can download that data. We actually download or store data for the most common futures and Forex markets, and you can actually replay the equities markets as well. Unfortunately, we just don't store that data at this moment, but you can download it or record it onto your own PC. So it's a quick overview of the feature I'm using right now, the market replay. So you see me click play, pause, and fast forward here on yesterday's data, which comes in just like it did yesterday. It's a great tool to use. So let's start off with the first technique I want to show you today, and you can use this in any trading environment that you're in. So to set this up, we're going to be combining several advanced features here together. So keep in mind these are more advanced features, and if you'd like, you can contact us. We've got more in-depth training on this. So just a pre-warning there. So it's a little bit more advanced, but I hope that some of you can use it right away. Now you see here we've got a setup here. This is the chart. I stopped here at about 9 o'clock. This is Mountain Time here in Denver, Colorado, so that would be about 11 a.m. or so Eastern Time. And I've noticed kind of a little consolidation pattern here, which I think will be a good example of how to use a breakout method. So let me go ahead and use the drawing tools here, and I'll just kind of highlight any sort of breakout that you're looking for, whether it be one bar, maybe a pattern, or if you're just waiting for some big news to come out. Maybe you're trading oil, or the inventory numbers are coming out, or the Fed's about to make a big announcement. The stock you're trading, maybe there's big news coming out. Whatever it may be, if you think there's some consolidation going on and you want to get ready for a breakout, this is a great technique to use. Now, we're combining several key features here, like I said. The first item we're going to start with is what we call OCO orders, and that stands for one cancels other. And the basis behind this is we're going to place two orders in an OCO group. That way, if one gets triggered, the other will be automatically canceled. And the reason that's important is because we're trying to take as much of the manual trading out of this process as possible, because especially with breakouts, the market can move extremely fast, and trying to click manually just really isn't fast enough anymore. So let me give you an example of what you can do. In NinjaTrader, you're going to right click to turn on the OCO order in the chart trader. Okay, this is our chart trader. Place orders right inside of the chart here. So now that we've got the green OCO turned on, we can now place our 2 orders, which are part of the OCO one cancels other group. So we're going to place an order above and below. Now these are going to be stop orders, stop market orders, because once they get hit, we want an order to go in for market at the market, so on the buy and sell side. You can alternatively use stop limit orders as well if you would like. Now the next feature we're going to combine is what we call ATM strategies. And in NinjaTrader, it's just predefining where your targets and stops are as part of this strategy. So I've got one here just named my short-term strategy, and I'll give you a brief example of how I've set this up. It's set into 3 different lots here. And then we've got stops and targets on either side, which you can set to a certain number of ticks or pips here, where we've got the US dollar 3-minute chart. Okay, so you can go between different strategies here. So I'll choose my short-term strategy. I've got 3 lots here. And now I'm going to right-click and place my first order, the buy-stop order. Okay. So here we've got the order pending, and actually let me unplug my volume so everyone can hear that. We've got the order here. You can move it around in the chart if you'd like to. Let me move it 1 tick or 1 pip above my area where I want the breakout. Okay, so that's if I want to go long. So if price starts going up, I'm going to go in long automatically, and it's going to be managed with the targets and stops I set up in my ATM strategy. Okay, now I'm going to then set another strategy down below. I'm going to right click and select a sell stop.
Order pending.
Okay, there we go. So now we've got the market bracketed. And you want to do this, of course, beforehand, before when you know the breakout's coming, or you suspect that it's coming based on your indicators or news. And at this point, you see we've got the market bracketed to the upside and the downside. Now, in NinjaTrader, you do need to turn off the OCO, so I'm going to uncheck this, right-click and uncheck it. And the reason we do that is it closes these 2 orders as an OCO group. Getting a little technical here, but it is kind of important. If we look in our control center, we've got an ID here for OCO. You'll see that those are both the same number there. That means that these 2 are in the same OCO group. And that way, if you're trading on another chart or on another instrument, it's not going to accidentally cancel these orders as part of an OCO group. So now we're all set up. We can just sit back, relax, and wait for that news to come out. This is where the market replay comes in handy. Let's go ahead and speed the market up. And I believe at this point we're going to get a break to the upside in just a moment here. Let's go to about 20 times market speed. And you're going to see the ask and bid kind of flying up and down there. We're going 20 times normal market speed. Now, the important thing to remember is when we get this buy stop filled, which actually there it goes, so let me go ahead and pause it. We just got that that buy stop filled, okay? And now we were long 3 lots, but now we're down to 2. I had one of my stops hit. But you can see my targets and stops automatically went into effect. And let me move my stops down here. Maybe we'll let this run a little bit. And we have our targets. We can move those up as well. So it's really flexible. But notice that at this point, you just sit back, you let that order fill, and then you let your targets and stops ride. Okay? And a lot of traders like to use this, especially just for maybe bracketing 1 bar. So it really depends on your time frame, whether you're doing shorter time, longer term. You can bracket like I did, maybe around a pattern here. Traders might call this, maybe a triple bottom, a W pattern, whatever type of pattern you're looking at. And so we got our breakout. Now you see that the stop automatically moved up. That's part of our ATM strategy. I'm not covering those in details right now, but they're very easy to set up. We've got the auto trailing stop. So we're in a nice profit right now, up about 7 pips. And it hit our trailing stop. So our last 2 are out there at our trailing stop. So that's a great example of how you can bracket the market for a breakout. And you can use that any time that you would like, any different market conditions. Now, let me see here. Let me just check for questions. Give me just a moment. Okay, I've just seen those questions now. Okay, the first one I see here, I believe, is can you use NinjaTrader on iMac without using an emulator? Unfortunately, not yet, John. Unfortunately, it is only a Windows-based set up for NinjaTrader. I know that our development team has, goals of setting it up for the Mac OS, but not right now. You do need to use the Windows emulator, VMware, Parallels, or something like that. Question here, what are the yellow and green dotted lines? Good question. That's a default indicator we have that I just put on there. It's called the swing indicator, and it marks the swing high and lows for you, and you can adjust those, if you want it to mark major, minor, you just increase the length there. So just right-click in NinjaTrader, select the swing indicator. I've just got a SMA on here as well, 50 period moving average. Down below, just a general MACD. Okay, FXCM, you can connect it to your FXCM account. Wayne, just go to NinjaTrader and go to support. We've got a connection guide for you. Actually, let me just see. I have it right here. Let me post this into the chat. And hopefully you'll see that. There's all of our connection guides. You'll find FXCM right there. I'll get to the discount here shortly if you give me just a few moments. And the entry on that one was made. We have a question on when the entry was made. If I go back to my control center, I can look at all of my fills here. So I was filled here at, my time is right over here to the right, 9:29 and 30 seconds. So that's 11:29:30 Eastern time. Okay, the replay is available for everyone for free. Okay, great. So let me pause right there and let's keep going on. I've got another great feature to show you, and I'll come back through to the rest of your questions. So keep typing those in, and again, you can email me sales@ninjatrader.com with your specific, setup questions if you need any help with that. So the next technique I'm going to show you is actually a little bit more advanced than this, and it's just a great one I like to show you. A lot of traders have never heard of this before. And it's called going long and short. I think we need a better name for it, but going long and short at the same time on the same instrument in the same account. So we do need, or it's best to use two charts or two order entry windows, whatever you like to use, price, ladder, chart, with this technique. Okay? So first of all, why would you ever want to go long and short at the same time on the same instrument in the same account? For fun there, feel free to type in, I think in the chat, you should be able to type in, or in the questions area, just type in, let's see if anyone knows, why would we ever want to go long and short at the same time on the same exact instrument while we get set up here. So what I'm doing while I look for those answers is I'm going to bring up two charts. As you see here on the chart on the left, a little hint for you. I've got, let's set this to the 15-minute, and over to the right, we're going to leave it as a 3-minute chart. Okay? So a little hint there. Exactly, a carry trade. Possibly. Take advantage of both trends. Exactly. That's pretty close. Both trends and pullbacks. Yeah, I think that's Ralph got it first. Absolutely. Hedging. Both sides of profit. Excellent. I think that everyone is just about getting this. In my example here, and you can see you can take this further to hedging, so I think that's a good example. But in my example, and the reason this was originally created by our team is for those of you traders who trade in multiple time frames. So let's set up this example here. Okay, what if I am in a long-term strategy, and I'm going to, on the chart on the left, it's a larger time frame chart. So maybe this is a swing trade. Let's just pretend I've been in this trade maybe all day long or multiple days, depending on how you trade. Okay, and maybe we've gotten into some profit, right? So let's just play this along. I believe that the market keeps going up. There we go. So let's say this trade on the left, we pause the time. Here's what we're looking at during the day. We've got, maybe a better profit than this. But we've got our longer term trade here, maybe a larger size here. We've got 10 lots on the left. Now, what if during the day, you see an awesome scalp opportunity? However, that scalp opportunity is to the short side. What do you do in that case? In most cases, you would have to, maybe take off your long position or some of those long contracts and kind of try to manage it maybe on paper. A lot of platforms, we haven't seen any platforms manage it the way NinjaTrader does. So let me show you this example here. It should clarify. Now, in NinjaTrader, we've got a property you can change that changes the display of your active orders. And we teach you how to do this at ninjatrader.com in our webinar, hour-long webinars. I know I just have a short time today, but I'm changing a property. I right-click, select Chart Trader Properties, Display Selected Strategy Only. Now, you actually get a warning message because if I select another strategy, if I'm trading with multiple strategies, I only see the orders for the selected strategy. The other orders are invisible. Okay, and that's why I get the warning message, because it only shows orders for the selected strategy. And I'll show you why we do this. So right now, not much has changed. You can see I'm in a long 10 on the left, long 10 on the right. Now, what if I now want to take a scalp to the short side? I'm going to choose my strategy here. Maybe I have a scalp strategy. I'll just call it my short-term strategy here. And again, you can build your different strategies. And this is 3 lots, and now I'm going to click Sell Market. Okay, selling 3 contracts. All right, so now take a look at how my setup has changed. On the left here, I just want you to notice NinjaTrader shows a 10 in this green box, -7L. That means that I am 10 long in this strategy, but my real brokerage account is only 7 long. The reason is we are short over on the right, 3 short, and again my account is still 7 long. So I get a lot of questions here, but let's say you call your broker right now and say, you know, what position am I in? They're just going to say you're 7 long. So what NinjaTrader does is it basically simulates this short position on the right, your scalp position, so that you can manage it as a separate position. Okay, and the reason that it still matters is because if you get filled on these stops or targets, it's adding back to your longer term position. So if it hits your targets, you're going to get a better average price on your longer term position. If it hits your stops, you're going to decrease or get a worse average price. So it still matters because it's still real profit and loss. Even though this is really a simulated position, your broker would not see this short position show up. So let's just play this out. I'm not sure if the market turns around here or not. But if it does, let's say maybe I'll move my targets up here just for a real short little scalp. But I'm right now long and short the same instrument on the same account. And so now if I hit my targets, and it's hitting my stops, so not the best choice there in this case, but it went up and hit my stops, and now added back on the left side, and you see I'm back to 10 long. Okay, so it's a great way for you to trade in multiple time frames, and if you're a better trader than me, I'm sure most of you are, you might have gotten that scalp and hit those targets. So let's try again here for fun. I sold short 3 here, and we'll go ahead and play this out. We'll see if we get any pullback here. And if it hits my targets, I'm getting myself better average price on my longer term position on the left. So there you go. I hit 2 targets and then it hit my stop. So we got 2 of those and then it was back. And now we're back to our longer term, maybe our swing position, which we can now hold for several days or whatever our plan is here on our longer term position. So a great way to trade in 2 different time frames. Okay, now let's get back to some of these power questions here. I can't see your name there. I think it's Irma Linda. I thought you can't hedge in the U.S. That's a great question I always get. You can't. That's right. You cannot. And that's why NinjaTrader makes that short position I showed you a simulated type of position. It's not a real position. Okay, so let me just see here. Someone had a question on NinjaTrader 8. We are heavily in development of NinjaTrader 8. Unfortunately, they don't tell people like me who talks with clients and our business partners much about NinjaTrader 8 because they know that I get these questions all the time. I do know that their general time frame is end of the year, first quarter 2014 for NinjaTrader 8. There's some great preview webinars out there. If you want to email me, we can give you links to some of the preview items we have for NinjaTrader 8. Okay, great. So we had good questions here. Go both ways. Okay, I think there's just some comments in there. Yes, Jerry, everything I'm showing you here you can do with futures, Forex, and equities. Okay, it's going to be the exact same. Of course, you just change your instrument and your quantity to the item you're trading. So maybe 100 shares. If you're trading a stock, for futures, it could be the same lots here, 3 or 10. And obviously, I'm showing it here in Forex. Wayne, custom indicators need to be recoded into NinjaTrader into C#. We've got NinjaScript. We've got lots of partners that do that, Wayne, so send me an email and I can give you some more information on getting custom indicators into NinjaTrader. All right, good questions there. And someone actually reminded me, BY reminded me that I didn't show you the range-bound market. So I apologize. That was one topic. I've got about 9 minutes left here. So a great feature, and again, we do show all the features in our live webinar. So if it was a little quick for you, let me know and go to YouTube. We've got a NinjaTrader channel on YouTube where we show all of these free videos as well if you'd like to see this again. So what I'm going to do now is let me close out of my positions here. And I'm going to actually go back to the morning session since I've got this nice market replay. I'm going to go back to where I had that consolidation here. So coming back to that first example, just resetting up here for that first example, remember that I showed the range here. So what if instead of playing the breakout, you want to play the range? It's very similar to that first technique I showed you. All you do everything the same. You just use limit orders on either side of the range. So you turn on the OCO, you choose your strategy. This time you place your limit, you use limit orders on either side of the market. Okay, so take a look at this. Let's just say you think the market's going to see this range. We know that it doesn't. But I just want to give you an example. You can set it up something like this. We know that a lot of times breakouts will fail, right? Some educators say 80% of breakouts will fail. So if you're in that scenario, you think the breakout's going to fail, you could set up something like this. Maybe put your sell limit a little bit above, a buy limit a little bit below. That way, if the traders try for a breakout, you can short that breakout. Okay, so turn off OCO. And so here's what it would look like. Very similar, except you're betting on the market staying inside of this box here, inside of your range. Of course, this time the breakout works. But if it had turned around and went back into this box, you would have your targets inside of this box. And of course, we know the market can be range bound a lot of times. Even if we just look back here, you know, we've got little ranges that we could have played off. But that's the opposite of the breakout, is just use limit orders to play the range. So kind of interesting setup there that you can use. Okay, great. So the last time I want to show you here in just a few minutes is a trade idea. Okay, so let's say you're looking through NinjaTrader here. You're playing with the indicators, and you see an indicator you think might be a good item trade with. All right, let's just look at the MACD here. Let's say you want to test out a MACD cross, right? So you go through here manually, maybe highlight those, look up at the chart and say, you know, maybe the price went up there. Maybe I should exit when it crosses to the downside. And traditional traders would do this by hand. Now, in NinjaTrader, I'm going to show you how to set up any trade idea, specifically this one here, so we can automate it. And we're going to use our wizard. So this means no programming required. It's a great wizard that we have. If you just go to Tools, New, NinjaScript, and Strategy. Okay, and we're going to click Next. You can name the strategy. I'm just going to call this our MACD test strategy. And you can do some naming here, describe your strategy. You can input variables here. This isn't required. It's when you get a little bit more advanced. But I want to show you the real quick condition builder. So here's our strategy window, and I'll just bring up that MACD in the background. You set up your action up top, or I'm sorry, your condition up top and your action down below. So for example, I'm going to click Add here. And the condition builder compares values on the left to values on the right. It's got all types of values in NinjaTrader: time, every indicator, your account, you know, whether you're long or short, things like that. So I'm going to set this up real quickly as when the MACD, okay, and Give me just one moment here. Let me look at my indicator, the MACD here. The green line's called the MACD, the purple line's called the average. So when the MACD crosses the average, or when the green crosses the purple, we're going to go long. Okay? And that's what I'm going to set up here. So I come down to MACD. And I'm going to say when the MACD crosses above, and then over on the right, we select the MACD indicator again, and we're going to say the average. So the MACD has two lines. One's called MACD, one's called average. So when the MACD line crosses above the average line, there's our condition. Down below, you just input your action. You can do a drawing tool. I like to set the background color here so you can easily see when that occurs. So I'm going to set that to maybe a green. And then click Add again. And you can do things like send an email, play a sound. I'm just going to say enter long position. Okay? So there's going to be my entry. Now, you could set that up for the exit as well. Under set 2, I could say, actually, we'll go and do this here real quickly. I'm just going to say when the MACD, MACD crosses below the other MACD line, the average, I'm just going to say exit position. Okay, so once you set up your conditions and your strategies in the wizard, you can then go through a quick back test and see if that's a good strategy. We have a strategy analyzer. Just go to File, New Strategy Analyzer, and I'll run through this real quick, and then I've got to give you the special offer, and I've got the guys from FXCM coming on here in just a moment as well. So here's our strategy analyzer. I just want to show you how, quick, just a few minutes we can do this. Right-click on any instrument. Oh, we did the Euro-US dollar back test. And there's our MACD test strategy. It's going to back test from the 1st till yesterday, just by default, but you can change all of these settings, how many, your order quantity, things like that. I'll put an order quantity of 100,000 standard lot. Let's go ahead and run the back test here. And there's my results here. So a little bit of a losing strategy here. It gives you all your statistics. I want to show you the chart. So take a look at this. Every time those crosses occur, and I'll add on the MACD here so you can see, every time we get across to the upside, we get the green line and we went long. And then when it crossed down, we got out of that trade. So it's a visual representation of your back test. You can go back through and fine-tune it, look at graphs of your cumulative profit and loss, all your trades, the different period, monthly, daily, weekly. So it's a great and very powerful backtest feature. Now, I've got just a few minutes, so let me give everyone the special offer here. I've actually got 3 in store for you today for the type of trader, or if you already have a NinjaTrader license key. Now, normally NinjaTrader license keys are $995 for our lifetime license key. That includes all future enhancements and upgrades to the software. So that means NinjaTrader 8, 9, 10 in the future you will get included. This is our best value. Just for joining today's event, we're going to give you a great discount here. If you have you want the multi-broker lifetime key, which means you can trade to multiple of our brokers at the same time, we'll take $200 off. So instead of $14.95, that's $12.95. And if you're just using one broker, we'll take $100 off. Instead of $9.95, you pay $8.95. You have NinjaTrader for life, no future payments needed. Now, if you already own the single broker lifetime license key, we're going to give you a chance to upgrade to the multi-broker. You can use broker A and B at the same time for only $400. Normally, we just charge the difference between the two, which is $500. And if you do currently have a lease, we will refund you for any of your unused lease time as well. You can combine this discount with your lease discount as well. And number 3, if you've never tried NinjaTrader, try these features right away with live trading free. Now, you can download NinjaTrader for free and try it in simulation, but we're going to give you 30 days trading into your live brokerage account. So you get 30 days. If you've never purchased NinjaTrader before, it's a $60 value. You have 30 days to try it free. You can cancel anytime, no risk to you. But if you stay after the 30 days, we'll just auto-enroll you in our quarterly subscription, $180 for, you'll get 3 additional months of live trading. So you can try the features I just showed you with live trading and see if you can make money that way. To see this, we've got this discount set up at the Real Trader special offer page. You can also email me with any questions, sales@ninjatrader.com. Let us know you were in the Real Traders webinar, and we will get you that discount link. But this does expire at the close of business Monday, so make sure that you take advantage of this offer right away. Well, that's all the time I had, everyone. Thank you very much. I'm going to go ahead and let the folks at FXCM get set up. They're going to get more in depth on the advantages of trading spot Forex. So I just showed you the tools. They're going to talk about why you might want to try spot Forex trading right now. Thank you, everyone. Take care and happy trading from all of us here at Ninja Trader. I'll go ahead and sign off.
Thank you, Raymond. Okay, everyone, so that was Raymond again. You can go over to realtraderswebinar.com/offers. There's a link where if you click on it, it will bring up your email, and it'll have the subject line Real Traders Webinar Discount. And again, next up we have James Stanley, so I'm just going to make James the presenter. And then James, you there?
I am here, absolutely.
All right, great.
All right, let me just get everything set up on my end.
Sure, no problem. And again, just to remind everyone, James Stanley is an active trader, analyst, and trading instructor at Daily FX. He began trading.
All right, is everything coming through loud and clear there? I want to make sure that you can see my screen, you can hear my voice. If everything's clear, please let me know in the chat box, and I will get this thing started. Got a lot to talk about today. All right, beautiful, beautiful. And Jim, thank you for that. And I want to thank Raymond Stein very much for that introduction. And like you said, my name is James Stanley. I am a trading instructor, an analyst, and a trader with Daily FX. Daily FX is the research and education arm of FXCM, so we're very much tied together here. I'm going to talk to you today about trading, or the advantages of trading spot FX, specifically with the Ninja Trader platform. The timing could not be more impeccable. I mean, we are literally sitting right in front of what is probably one of the more contentious fundamental announcements we've had in a very long time. Before I get started, I'm getting a note that we have background noise. Is that pervasive thing here? Something that I should fix? Or is everything good to go? All right, looks like everything's good to go. So on Wednesday, the Federal Reserve is going to meet and announce a rate decision. But it's not the rate decision that we're looking for here. Nobody's expecting any increased rates out of the Federal Reserve. What we're looking at is probably one of the bigger macroeconomic themes of the last 20 years to be answered for. And this could provoke some massive volatility amongst markets. So we've got a lot to talk about. We've got a really short amount of time to do it, so let's get to it. Of course, like Mr. Stein said, my name is James Stanley. I am... there we go. That is me. Trader, analyst, instructor at Daily FX. Feel free to reach out to me. I'm more than happy to help with whatever I might be able to. The best way to do that is over Twitter. I'm available at jstanleyfx. You could type that into Google or Bing or Alta Vista, any of your favorite search engines, and that should be able to take you to the same place. But I'm more than happy to interact with our traders through Twitter. And it's a great place to ask questions and just to talk about strategies, market conditions, etc. Now, before we do go any further, I need to make sure that you're familiar with this risk disclaimer, because we're going to talk about some trading strategies. We're going to talk about trading in the FX market. And, of course, whenever we're talking about trading, we have to know that there is absolutely risk involved. So if you're not familiar with this, please familiarize yourself with it before moving on. And as I said a little earlier, we got a lot to cover, and this is what we're going to try to attack. We're going to first go over advantages of spot FX trading. And then we're going to look at trading FX alongside equities and futures. Then we're going to go over the Ninja Trader offer, and then we're going to have a little bit of time left for a Q&A. Now, just a little background on myself, and I believe this was in the bio that was shared with you. I've been trading since 1999. That was literally my 18th birthday. On the day that I turned 18, I had my first trading account. We were looking at one of the greatest bull markets of all time in the United States, and that's really what drew me to the market. I was 18, I was a dumb kid, and I figured, well, hey, I got a little bit of money, I could probably make something with this, right? And in a really short amount of time, I rolled that small amount of money into a very sizable sum. And like any other 19-year-old with found money, I went out, I paid cash for a Corvette, wrote a check. They even had to call the bank to make sure that I had the funds, you know, and it naturally gravitated my level of lifestyle to an exorbitant extent, only to find out that markets aren't always going to give you bullishness. The tech boom became the tech bust like that, and I rode with it. So I'm going to rope in much of my story in today's presentation as we go through some of these very prescient points. So first and foremost, we're going to talk about advantages of trading spot FX. Okay, there's quite a few. One of the things that became very clear and apparent to me when I first started trading was the fact that transaction costs are a big part of this game, right? Because it's like any other business. If you're producing income, well, the amount that's going out, that's important too, right? And if you could get those transaction costs lower, well, that's only going to make your approach more valid or more valuable. Spot FX can get you some very low transaction costs relative to other ways in the market of getting the same types of exposure. Flexibility. This is huge to me. As a professional trader, one of the big things that I look at is control. I'm disciplined. I know what I want to do in markets, so the more flexibility I have, the better off I'm going to be. This is a true 24-hour-a-day market in spot FX. That could bring some very tangible benefits to us, and we're going to look at that. But maybe what I'm more excited to talk about today is the macroeconomic themes and ways of playing that. Last but most certainly not least, we're going to look at available leverage because this is a big one to traders. This speaks right to that flexibility quotient. I want to note here, though, leverage is dangerous. I'm not saying that this additional leverage is all benefit. No. It simply enables us to be more flexible as traders, and this is something that we can use advantageously if used correctly. So first and foremost, transaction costs, right? Once again, if we're trading professionally, this is probably one of the most important parts of our decision where to make that approach. In the FX market, rather in the spot FX market, we're largely and generally talking about commission-free trading. What this means is that your entire transaction cost is that spread. Okay, in many arrangements in the spot FX market, your transaction costs are solely the spread, the difference between the buy and the sell price. This enables quite a bit of flexibility. It makes it easier to conceptualize those costs, right? Let's say, for instance, you enter a trade on the euro dollar or in futures euro. Open that trade in FX, you instantly know your break-even point. It's the spread, right? Because if you buy, you got to execute on the other side. So you're automatically upside down in the trade by the spread. You get to zero, boom, you're at break even. It's simple. And for traders that do have a little bit more on their account, there are numerous options that FXCM has to get even better pricing, to get lower transaction costs. And that is absolutely something that's available to you. I'm going to bring on Mr. Mustafa in about 10 minutes here, 12 minutes. And he's going to be able to explain that with much more depth. Okay, so we can even get transaction costs lower for a lot of folks. But this is what we're talking about. And this is why Spot FX is such a fantastic venue for voicing those macroeconomic themes because of these transaction costs. If you look over in the far right column, we're looking at Spot FX, where our transaction costs are the spread. That's it. To the left of that, we're looking at currency futures. Okay, and notice the spread, it's still there. It's still a market, so there's still a spread. There's a difference between the bid-ask. There's a bunch of other costs there, right? I mean, if you're going to make an opinion or voice an opinion on the euro-dollar or the dollar-euro through a futures contract, your brokerage is going to want a commission, right? They're not going to do it for free. And then the exchange, well, they have a fee as well. You got to clear the trade. There's a clearing fee involved. And you got to decide how you want to hit the trade. So there's a charting fee. There's a data fee. These things add up. And to a not insignificant amount. Whereas if you're trading at Spot FX, it's simple, right? You got everything right there in the spread. And the reason for that is because many brokers, like FXCM, they're doing all of this for you. They're brokering the trade. There's no exchange fee because this is an OTC product, so you don't have that fee to pay. FXCM clears the trade for you. FXCM gives you charting packages. It provides the data for free. And you can even get an enhanced charting package like NinjaTrader to get even better analytics, or maybe even to integrate an algorithmic approach into your strategy. And this could be huge. This could be key. This is just the tip of the iceberg, though. This is just one reason to look at Spot FX. Flexibility is another. This is what is huge to me. And as I shared with you, this is all I've ever done in my adult life, and this is all I ever want to do. I spend about 14 to 16 hours every single day on charts. Every day. And so the 24-hour-a-day nature of FX is huge to me. Now, this market's been available since 1999 to individuals. And as I shared with you, that's the same year that I started trading. But I didn't start with FX. At that stage, FX was too young of an asset class. As a matter of fact, you might have heard some horror stories about the spot FX market from those early days in 1999 when it was unregulated, it was unmanaged, and it was essentially the wild, wild west. Well, that's not anymore. Congress has made sure of that. Christopher Dodd, Barney Frank, they authored a really massive piece of legislation a few years ago that's had a huge impact on the FX market, and it still does today. But this has helped to legitimize the FX market. This is something that FXCM has been behind from point number one. Now, one of the reasons this is 24 hours a day is because it is OTC, or over-the-counter, okay? On Sunday, we're going to open up at 5 p.m., okay? This is when Wellington, New Zealand begins quoting prices. Okay, and then at 7, Sydney, Australia begins quoting prices. Then a little bit later, Japan starts quoting prices. A little bit later, Europe starts quoting prices, and then start getting prices here in New York, and the market stays open all week. And Friday at 5 o'clock, we come to the financial close here in New York, and the market's still open. But at most brokers, trading closes at that time simply because liquidity is so low, and it can be a dangerous environment. But also, speaking of flexibility, we're talking about those fees, right? If you're placing a large number of trades, or even large valued trades, those fees are important. And then another one is really big: automatic rolls. What is a futures contract? Well, it's a contract to swap in the future, meaning it has an expiration or it has a strike. In spot FX, you're making the trade right up front. There's no future dates to be involved with. So if you want to take a long-term stance on, say, I don't know, the Australian dollar, well, you don't have to worry about changing out of that contract at every expiry. You could stay in the Aussie and let it ride until you want to close it. Now, one of the reasons that Forex has become so popular over the last few years is right here. And this is why this has really, really capitulated since 1999, because of globalization. And this is not something that's going to slow down. This is only going to increase. And if you try to say that it's not, you are swimming upstream. But in 1999, many economists considered China a third world country. Look at all those shipping ports on the right side of this map. China is no longer a third world country. China is the second largest national economy in the world. And many feel that it has the legs to be the first in a very short period of time. But the internet's made the world smaller. China's no longer a third world country. These economies work together. And if you don't believe me, look at 2008, where a couple of very bad decisions by banks in the United States had reverberations that have been felt around the world and are still being felt today. Forex is the oil in the gears of global trade, and this is only going to increase. It's not going to go down. So that brings up major macroeconomic themes, right? And we just touched on one, the reverberations of the financial collapse. And it's probably nowhere best said more so than Europe. The European debt crisis has rattled the world. It's changed political theory for years to come. There's still a mess there, right? Now, we haven't seen the same violence of volatility out of European-related assets this year that we had previously. But that doesn't mean that this game is over yet. There is a lot more to go before we could say that Europe has recovered. The growth of China. We touched on this already. But this has had a massive impact on the way that the world's worked, right? Now, if you don't believe me, I got this right in the chart, right here. I'm going to have to go over to my friend the Aussie. And this brings up one of the best parts of the FX market, correlations, right? As an American citizen, I simply cannot trade the yuan. I can't trade most Chinese assets because the PBOC, the People's Bank, they don't want it to happen. But look at what has happened since that growth in China has really taken hold. The Aussie dollar was down here just a little bit above 50 cents on the US dollar. Right back here in 2001. 10 years later, more than doubled in value. Now, if you look at this on the face of it, you might say, yeah, sure, that's 62 cents on the US dollar. It's no big deal, right? No. What you got to look at is what you could have done with this movement. Right? As I said earlier, you have available up to 50 times leverage. What this means is if the Aussie dollar goes up 100% in value, and you lever that 5 times your portfolio, your trade makes 500%. Lever it 10 times your portfolio, you're talking 1,000%. And of course, 50 times your portfolio, 50,000%. Right? I mean, I know these are exorbitant sums, but this really speaks to the flexibility of the FX market that is so unbelievably valuable to traders. The potential for a Chinese bubble. I mean, because after all, what goes up must come down, right? And after we saw what happened to the United States, we know that the potential for bubbles exists. And then, I mean, we could talk about these little nuances like shadow cities in China that have been used to essentially window dress GDP growth over the last 7 years. I mean, these are shadow cities that are populated by like 1.2% of the city as a whole. The government of China went out on a limb. They built it on credit. They said, well, if we build it, they will come. But, I mean, we simply haven't seen growth in the Chinese middle class to substantiate that building as of yet. But the Chinese they're smart. They realized a long time ago that, wait, we could build this. We could claim it on GDP. We could show 7% annualized GDP growth and attract money from around the world. And eventually people will move into them. Well, they haven't moved into them yet. So there's a very, very big potential for some very erratic movements coming out of China over the next 15 to 20 years. And this is something that's going on right now, right? The unwinding of a commodity super cycle. This is one of the things that helped China grow. It helped Australia grow. As a matter of fact, China might have even been one of the main causes for that commodity super cycle. As China grew with 1 billion people in that economy, saw massive demand for raw materials like gold, silver, metals coming out of Australia that were mined and sent to China. That's one of the reasons that Chinese correlation is so strong through the Australian dollar. China is Australia's biggest trading partner. So if something good happens for China, it could be good for Australia. And that could be a very valid way of making that play as opposed to using an ETF or a non-deliverable forward. It's really just a synthetic derivative. That, might I add, a synthetic derivative that becomes worthless if your counterparty isn't there to offset. Speaking to that, does anybody remember a little named John Corzine? One of my best friends in the world was managing a hedge fund. And he was 2 years in with a very, very respectable track record. He needed 3. You get 3 years as a hedge fund manager with a very good track record. Well, now you're listed. Now you're going to attract capital from funds of funds. And you don't even have to really work that hard anymore because your performance speaks for itself. My friend was about 9 months away from hitting the promised land. There's one problem. His account was at MF Global, of which John Corzine was the CEO. Well, Mr. Corzine, in his infinite wisdom, decided to go 30-1 on magic beans, Greek bonds. 30-1 meaning he levered his account, he levered his trade 30 times the amount that he actually had. And we all know what happened with Greece, right? A technical default. Mr. Corzine took a bath. My buddy, well, it didn't matter that he had 2 years and 3 months of a track record because he could no longer get his capital because John Corzine lost it. Now he was eventually made whole 9 months later, but now he had to start all over again. His 2 year and 3 month track record is worthless. It stinks. Nature of the beast. If you would have had those funds in the spot FX market, we would probably be talking about a different story right now. And then, last but most certainly not least, the growth engine of emerging markets. This is something that is only going to increase. The majority of the world's people live in emerging markets. This, once again, if you don't think this is going to happen, you're swimming upstream. So I got to hustle here because we're going to bring Mr. Mustafa on to discuss the NinjaTrader offer. But this is the big one. Massive QE and the unavoidable taper, and we're going to hear about that on Wednesday. Now, one of the things we do at FXCM, we teach our clients to trade. We teach our clients to trade these themes. Everything that I do is completely free. I don't ask for any money. I don't sell any services. I work with FXCM. FXCM clients get to watch my webinars completely free of charge, and this is what we're walking our clients through right now, how to use that. Trading FX alongside equities and futures. Because let's be honest, there's no reason that you have to dedicate yourself to just one market, okay? The trader can utilize the flexibility that we've spoken about with spot FX and still retain access to other markets, right? And a good example of that is non-systemic risk, like company-related risk. And I'll give you a good example. There's a biotech company that I'm invested in right now. I can't give the ticker symbol because I don't have a Series 7 license any longer. A biotech company that I'm trading in, essentially looking for a drug to come out of FDA stage 2. Okay, that announcement's expected in December. But this is a play that I'm making not on major market themes. I don't care about China on this one. I don't care about Latin America. I simply care about a small segment of an economy that may produce some above average market returns. So if you want to make one of those non-systemic risks, by all means, that's what equities are for. Macroeconomic risk, though, is a different story. Futures and options, to that same degree, they can offer exposure and hedging benefits that can absolutely befit the trader, specifically with metals, oils, and indices. Now, I wanted to go over this because this is a big difference maker to me. It's a zero debit policy, and this is one of the reasons to trade not only spot FX, but with FXCM. At FXCM, if you ever lose more than your deposit, FXCM will make you whole, meaning you'll never come to us owing money. Okay, if you have a really bad trade on NFP and the market gap's against you, that's okay. We'll make you whole. We'll take you to zero, and then you can refund your account. You don't have to worry about that prior debit. Spot FX can be an optimal vehicle for algorithmic trading, just like Mr. Stein showed us in the NinjaTrader presentation. It can be a much more flexible venue for playing those macroeconomic themes, and it can be much better for the execution of strategies like carry trades, trend trades, long-term positioning on macro themes. So this is the NinjaTrader offer right here. It's real easy to get set up with this. This is right from our website. This is something you could do right now. Mr. Mustafa is going to walk us through this. And this is the offer right here. FXCM will pick up your NinjaTrader price, your cost, provided that you open an account with $5,000 and trade volume of $500K per month. And this is the email address of the gentleman that you want to get that offer set up. Now I'm going to bring Mr. Mustafa on right now so that he can tell us a little bit more about the offer, because I have taken entirely too much time, and I really want to thank you, ladies and gentlemen, for that. But let me see if I can change over. All right, beautiful. And Mr. Mustafa is on. Ladies and gentlemen, thank you very much for your time. Have a fantastic rest of the day.
All right, thank you, James, and thank you, everyone, for attending today's webinar. It's definitely a pleasure to get the opportunity to present to everyone. As my colleague Raymond Stein with NinjaTrader has shown, the NinjaTrader platform is a powerful platform that's going to give you the ability to trade multiple asset classes through multiple brokers from one interface, the NinjaTrader platform. And here at FXCM, we understand how expensive it is and costly it is to trade multiple markets. As James Stanley has shown, there's definitely significant fees in trading multiple markets using multiple platforms. And that's why we want to cover your monthly NinjaTrader fee. And I can go over how to do that exactly in 5 minutes, I promise. But first, in addition to promotions, offers, and bonuses that brokerage firms offer, there are many other important factors to consider when deciding on what broker to select to trust your hard-earned money with. And the first and most important, in my opinion, is financial strength and transparency. As James Stanley covered, MF Global, in addition to that, PFG Best, within the last 18 months, are both brokerage firms that have gone under. PFG Best, they're privately held. If you had funds with them, you had no idea 24 hours ahead of time that they were going to go under. There was no way to check on their financial strength, what they were actually doing with their funds. If you look at what happened with MF Global, Corzine took massive amounts of risk, proprietary trading, correct? FXCM we differ in that aspect. First, we're a publicly traded firm on the New York Stock Exchange, over $1 billion in market cap. We have full financial transparency, and we are proud of our financials, and we actually display our financials on our website. If you look here, you can see everything from A to Z on our balance sheet. You can see how much we've made quarterly, how much we've made yearly, how much client funds we hold, and you can see our track record. You might be asking yourself, well, why is this important? This is extremely important. You have worked tirelessly to save money that you can take and invest and create supplemental income through, correct? You need to know, who am I putting my money with? Is the firm I'm putting my money with going to be here 1 year from now, 5 years from now? Well, really, the best way to do that is to study your company's financials. We're more than willing to show you that we have, as of March 31st, $193 million of our own net cash. We're more than willing to show you how we make money. We don't have proprietary trading. We're a 100% brokerage firm. We only make money off of the spread and off of our clients' trading volume. We're not going to go and put your funds at risk and put FXCM at risk by making proprietary investments. Now, in addition to financial transparency, what else should you be looking for in a broker? You should be looking for a broker that is going to be on your side. A broker that has no conflict of interest with you, right? It's already hard enough to be a successful trader. Why have a broker that's going to make it harder? And that's why FXCM has pioneered the no dealing desk execution model. Through our no dealing desk execution model, we will never hold the other side of your positions in the market. Straight through processing, any trades you place through us are automatically offset with one of 10 of the largest to 15 of the largest financial institutions in the world. I'm talking Citi, I'm talking Goldman Sachs. And then we put up a wall between your account and the liquidity provider. Give you anonymity. Therefore, they're never going to be able to trade against you, manipulate your trades, because they don't know that you have an account with us. They don't know where your stop levels are, where your limit levels are, where your entry levels are, where the margin call level is in relation to your account. So that being said, how are we compensated? We're strictly compensated from a markup on the spread, which is your only cost to trade the FX market. So the more you trade, the more money we're going to make. Therefore, it's in our vested interest that you are a profitable trader. Because if you're profitable, you're going to trade longer, and you're going to make FXCM more money. Which brings me to the third point to consider when looking for a broker. What does the broker offer, tangibly offer, that is going to assist me in becoming a profitable trader? That is going to assist me in being an informed trader and investor in any market that I trade. And because of this, I wanted to have James Stanley with us on today's webinar to show you that we have a full team of analysts and trading instructors at no cost to you whatsoever. If you have an account with FXCM, you have full access to Daily FX and Daily FX Plus. If you don't have an account with FXCM, you simply have a demo account with FXCM on NinjaTrader, you will still gain full access to Daily FX. Daily FX is one of the largest news analysis websites for the FX market in the world. Through it, you have access to 15 hours a week of free trading webinars, from trend trading, technical analysis trading, to scalping the market, to trading based on financial news and economic data. Also, we provide 24/7 customer support. You can literally call us right now. So test this number out, the toll-free number I have provided for you, and we have someone available to answer your questions. Why? Because this is a 24-hour market. We understand how important customer support is to you as a trader, and we want to be here for you 24 hours a day. In addition, we provide free mobile platforms, tablet platforms. In case you don't have access to NinjaTrader, you don't have access to your computer, you can still view and manage your positions at no cost whatsoever. So that being said, just because I'm running out of time, I'd like to go ahead and go over our promotion. If you simply open a $5,000 account with FXCM NinjaTrader account and simply place 5 standard lots per month through that platform, we will cover the entire $60 monthly fee for you. That's $180 a quarter, $720 a year that we are willing to save you because we understand how important it is for you to have access to all of the world's markets, including FX, in addition to your equities, futures, and stock trading. We don't want to make it more difficult on you. We want to make it easy on you to have access to all these markets, and that's why we provide this promotion. So please, I have given you my contact details here. I manage a team of relationship managers. We'll give you one-on-one support. Simply email me or call us on our toll-free number, and we'll be more than happy to answer any questions you have, direct you to our daily FX resources, and set you up with demo accounts if need be, or live accounts as well. Thank you very much, and if you have any questions, I've ran out of time. I apologize. Feel free to email me.